All right, what up, everybody? This is Startup Brothers number 13. I'm Trace Cohen. This is Maxwell Cohen, and we are in the arena tonight.
Sunday Night Football. So
Yeah, yes, football's back. It was on the screen, but I gotta pay attention. But yeah, being in the arena. So it's been a rough 2 years. We've been doing this really a year and a half. We'll be more consistent with it. But what stops the tech market is the IPO window closes. And the companies that went public, IPO, direct listing, SPACs, basically have gone down so much that companies don't feel confident to go public anymore. No one wants to take them public. The bankers, no one wants to give them money. The hedge funds, the family offices, the private equities. And so what happens to the later stage? It stops. You get a roadblock, and that just kind of cascades all the way down. And that's what we have seen the last 2 years. And we were just talking before this that, hey, maybe there's some shining light at the end of the tunnel, right? And we're just
always is.
waiting for that IPO window to open. Right now, we've had a few that have IPO'd. Max will talk more about kind of Klaviyo, his experience with that. They just filed to go public. The numbers are looking good, right? I think there's something called profit net
Yep.
revenue, net income. And Max uses this company previously, and apparently a lot of direct-to-consumer CPG companies use it.
Yep. But there's a big switch over because it's really nothing too proprietary. It's the same email marketing. And what is so cool about email is that it's still the most powerful tool or one of the most powerful tools. I always
It
explain to
is.
people when people collect data, you know, everybody thinks it's the X's and O's and some matrix, which it probably is. But it's really just getting somebody's email address and phone number so you could text, which is part of Klaviyo, which they copied a larger company that was doing very well in the SMS industry, and then it's all just email, and it is a great platform. It really does help you come up with email flows. It's kind of just a plug and chug at this point. When I first started using it, you kind of had to write your own scripts, and it's really, you have it's like a family tree almost. Like it starts, and then if somebody opens, then
No,
you
I've
get with
seen
this,
those.
wait
Yeah.
15 minutes. If they open it twice, and if this one they don't open, what do we do? Wait 30 days, and if they do open, there's a whole sequence. But now they've really made it easy. But there is
It's
a
a
mass
science.
exodus. Yeah, there is a mass exodus from the direct to consumer. I go to all these events, and now there's a new company that's sponsoring all of them, and for good reason. I don't know how hard or expensive it is to run one of these companies. To me, it's email marketing. I don't know how hard it can be, but it's a massive scale. But all
Infrastructure.
of the big direct to consumer influence people are switching over. And I see
Hmm.
my bill increase every single month. And I go to my CMO, I go, dude, we need to fine tune our email list. Each one of these emails are costing me a fortune. So they charge you 2,000 emails on their platform, 5,000, 10,000. Really not even how much of those 10,000 actually get executed on, but if you have it in their system. So, we refined it. So weird how many people sign up for my bedsheet newsletter. Um,
You
that's
send it to a lot of people, and people out there in the ether sign up. I was just reading like Nick Sharma's latest email tonight, and it's like, hey, you buy ads, advertisements, emails by the thousand, right? As long as I can get one or two, three people to click, that is success. Who are these people? We don't know, but it's behavioral, as you said, right? They have that tree. If they didn't open it, if they did open it, how did they open it twice? Like, did they scroll? Did they click? Like, all these amazing things that you're being tracked. And I generally give my data away. I
yeah.
want more targeted emails. If you're on Twitter, X, the advertising is horrendous right now. And I miss that from like Facebook, which knows everything ish about you. It makes life easier. You can sell a product to somebody who probably wants it.
So let's just rewind. Why do companies IPO? What is the premise and what is the motivation of IPOing? I remember Mark Cuban reading one of his books saying he started his company to IPO. Now, as a founder and learning from some late stage founders, um, they don't want the governance of the public market. They rather just stay private. So I'm assuming it has to do something with fundraising. You went through your series A, B, C, D, E, F, G, H, I, J, K, L, M, N, Z, and this is the only
Yeah.
way to raise more capital. Are there situations where desperation, where just do it as you can? I feel like that was more of a SPAC market thing, where it's just like, all right, and then the insiders take advantage of the situation after all the market and hyping of whatever they are SPACing. But what is the premise,
Yep.
and why do people do it?
So an IPO literally stands for initial public offering. When you said that you raise certain rounds, IPO is just another raise, but it's in the public. We become publicly traded shares. And they really sell 10 to 20% of the company. And it is a fundraising mechanism, but it's also a liquidity mechanism. And so generally when you're raising like angel
Yeah.
pre-seed to us all the way to BC all the way, most of that's private, sometimes at the later stages, but it's such large numbers, you have the ability as an early investor, employee, founder to kind of cash out in the secondary. But the idea is, yes, 100% this is a fundraising mechanism. And there are other ways like a direct listing, which you directly list your shares and you don't actually raise any capital during that time. The main premise is if I do a direct listing, I can sell my shares day one. 99% of the time with an IPO, there's a lockup 6 months. So you can't just pump it and then dump it like, oh, we raised the capital and now we're out. And so generally it is a higher valuation because it is a fundraising from the year last. In the case of Klaviyo, I'll find out what their market cap in previous fundraising was, but apparently they've been relatively capital efficient. They still have a lot of capital in the bank. It's a tried and true method, as you said, kind of like email marketing. It works. It's a gross margin, high margin business. On the other side, you have companies like Instacart,
Yeah.
that great company, kind of all around, like solid fundamentals. They showed some growth. COVID was definitely kind of make and break for them. Everything shut down. They had to fire a lot of people, but then everyone was home,
Yeah.
or a lot of people were home,
Be able to
and people
demand
did
work.
delivery. Right. And so this is actually going to be really interesting because their valuation from 2021 was 39, $40 billion. Kind of later into COVID, it dropped down, I think, to like 27 to 13 to 9, back to like 17-ish. Like it kind of fluctuated because they had to keep raising more capital. People wanted in as it dropped, buy the dip. And their numbers are definitely growing. But apparently, and this is just Twitter, apparently they're pitching now to the banks, the Goldmans, all over, that they're going to go out for an $8 to $9 billion valuation. And right, it's kind of behavioral, right? That will get oversubscribed. You'll read in the news very shortly. It's oversubscribed 5 times. Whatever their share price is, assuming it's going to open, they say in the range, they'll raise capital. So if they're going out for a $9 billion valuation, they'll go out and raise $2 or $3 billion, right? And they'll dilute the company 10, 20, 30%. It's going to pop. I'm calling it now like 50 to 100%. It will be worth $15+ billion minimum by the end of the day. This is a company everyone's known. It's gone through Y Combinator. Every big VC is in it. And this is going to create liquidity for, or eventually, a lot of these investors, right? If I invested at a 10 million valuation, came through YC probably 20, it's going out at $10 billion. I'm getting 100, 200x on my investment
Yeah.
minimum with all the dilution. So this is going to create a lot of liquidity for people, and maybe it'll kind of just start to jumpstart the market as well. Because there's the early investors, there's the employees, there's the founders, and all the banks that are associated with it.
And when a lot of people are making money, that floods the market with a lot more people making money and maybe doing silly things like the NFTs in the crypto market. But
We'll talk about that later.
do people also go public because they can't get acquired? Like when do you go the acquisition route? Or I know like you could, I guess, buy all the shares like Twitter and make it go private again. What I don't I you know, is
Yeah, there's buy
I don't know
versus
the
build.
answer.
And so I think it has to do with what the founders want, what the investors want, right? So the founders, as you said, they want or don't want governance. So in 2020 and 2021, why would you go public right away if you can just stay private, right? You don't have to answer to the public. A big thing about being public is you have your quarterly earnings. And so unlike Mark Zuckerberg, who took that huge risk and lost like $40 billion in the metaverse and on VR, you can't really do that once you're public. You have to be in like a cadence. Financially, accounting wise, it takes 2 years to really get IPO ready. The whole SPAC thing, you could be ready in a few months. There really wasn't too much going on. But if you want an IPO, you have to get like all these different compensation boards. You have to get audited. You have to have a trail, and you also have to show growth. If
Yeah.
I'm going to IPO, traditionally, I want to show I'm growing 20, 30, 50% at least year over year sustainably with maybe a path to profitability. So you also then have to plan out because you don't want to IPO and then tank, which a lot of companies did because many of them probably shouldn't have gone public. And to your point, an acquisition. So these bigger companies have a lot of cash. If you're generating, I don't know, $1 billion in revenue, like Figma, Adobe just offered to acquire them for $20 billion. They are, I think, doing almost $1 billion in revenue. So 20x their revenue is their valuation. Could you go public at that? Probably not. Would I buy Figma stock as a public company doing design? Probably not. But would a multi-hundred-billion-dollar company spend $20 billion to get $1 billion in revenue that they know will grow 20, 30% year over year and they can kind of eat some cost? Yeah. And they'll just add it to their other services and they'll just easily make up for that in a few years because they have that long-term view. Adobe's not going anywhere. That's the buy versus build. And then unfortunately with SPACs, a lot of these companies couldn't get acquired. They couldn't raise more capital, either privately or publicly. They couldn't do a traditional IPO and they SPACed. And I have the stats somewhere like 90+% of all SPACs are way below their NAV, their $10 a share price. And so it is the good, the bad, the ugly. So Chamath, smart guy, social capital, SPACed a bunch of companies. I think one materials is doing okay, but besides that, he's lost 90+% on like 5 or 6 of them. And so yeah, he's in the arena. He's trying things great. I'm not raising billions of dollars. I'm not taking companies public and losing all that money and losing some reputation or face. So I'll give him credit. He's in the arena. I'm not. I'm just here a talking head. So hopefully someday we can do this on like the stock exchange and
Yeah.
actually take some of these companies
Or be on a
public.
yacht like they're all in podcast.
Right. Let me go into Italy. So, not throwing too much shade there. Like, if I was in this position, I'd try that stuff too. I'm just not. Would I love to have a company I invest in go public? Probably, but you have a 6 month lockup. So it's like I want to go public, but then I have to wait 6 months and like, do I just sell knowing it's going to tank? Like, yay, hoorah, I've been with you for like 10 years. And so sadly, it all goes away within 6 months.
Yeah, I
Two
feel
earnings.
when you take institutional money as a founder of a private business, right? It's private. It's growth because now you have to play their game. They have people to report to, and it's all about growth. And to me, why do I have to grow? If I mean, I rather find two numbers to make my bottom line stronger than grow at all cost. Growth ain't easy. It's not fun if you grow too quickly as well in a weird sense. As much as everybody's like, oh, you grew so quick, but if your body grows too quick, it gets a little deformed and things get out of proportion and just it's not built, structurally sound. So I always joked around VC money and raising too much money is almost like toxic. You inject steroids, and what happens when you have steroids? You need them forever. It's very
Yep.
hard. It's very hard to wean off of them. So it sounds like it's almost like a crowdfunding, and so I feel like once you get into the public eye, where people like you and I, even and we're pretty experienced, people with even less experience start judging a company and how much can you grow in 365 days. This year's almost over. um, I don't
Yep.
mind plateauing and fine tuning and becoming a smarter business as a small private business. But I did just hear of a company the size of mine is a public company. I didn't fully understand how that works and why it works, and maybe it's a direction I'd like to go in because I have a cool presence and a cool product with wonderful, strong reviews. But I don't know the specific answer of how and why those things exist. We could get into that unless you know the answer off the top of your head. But it sounds cool to me at this point in my career. I'm very confident with what I built. And if I had to show my numbers to the public, I'd be kind of proud of it.
Yeah, and so that is a Reg A mini IPO where you can kind of go public. And I don't know too much about it, but it's kind of like a crowdfunding-esque way to do it. But to your point about growth,
Yeah,
VC can be toxic. It is unfortunate, but statistically, 9 out of 10 investments that we make won't work out. Is it because of the ability that they had to grow so fast that it was pushed upon them? Look, if you raise capital from an angel, a VC, or anybody who expects a return, you should know what they expect. Can they push you? I mean, yeah, that's kind of our job. I give you money and I want you to grow. I want to exit. I'm giving you money to make money. It's kind of like in Mad Men. You never say thank you. That's what the money's for.
yeah,
So I do appreciate it because I can't take it out. It's liquid. I want to be your friend. I want you to be rich. And like you'll be at the dinner with us also on Tuesday. We're having 15, 18 of our founders come together because I like them. I miss them. Some of them I haven't met, but I also want a community. The good, the bad, the ugly. Some of them have fired a lot of the company. Some can't hire fast enough and are getting a lot of term sheets. And so I want to bring founders together because just mentally they can help each other personally and professionally. And so that's also why companies want to or don't want to go public. It's an ego thing. You'll see some CEOs we know that are just quiet. They took their company public and they don't really go out and do a lot of press. And then there's other ones on every single TV show. They're tweeting, they are pontificating, they're on every podcast, and to each their own. It works in every way where there are, what, 35, almost probably 4,000 public companies.
yeah.
I don't know anybody who can name probably more than 100 of them. There are
True.
so many public companies out there combined worth probably a few hundred billion just because of like Apple, Amazon,
Yeah.
Google worth like the majority lion's share. But there's 4,000 public companies.
So unusual. What I love about these gatherings, whether they're in the same industry or niche, is everybody sort of has the same problems. You know what?
Yeah.
And it's all very similar. You know, you could be $100 million business or a $2 million business or $100,000 business. We all have inventory, cash flow, website fulfillment, logistics problems. All of
Yeah.
us, every
Yep.
single time. And it's just depends on the scale, but we all have the same problems. And it used to be a free for all putting all the pieces together. You know, it was all the same framework, but it's putting the pieces together. So now, I just spoke, I'm trying to fine tune my business. I want to make more money on the same business that I have today. What does that require? One of the things that costs me the most is my fulfillment.
Is
My cost of
that
goods
the
is this.
3PL?
Yeah, 3PL. So now, we're all kind of banding together on the inside, all saying, it's an industry of who sucks less, the 3PL industry. And then there's one dominant force when it comes to the overseas logistics, and we'll get into that in a sec. But we all have the same 3PL problems. And so a lot of us are banding together, going after one 3PL and trying to negotiate rates. It's almost like unionizing in a weird, fun way, where
Unions make
startups are like,
sense.
we are going to, you might do 100 units, you might do 100,000 units a month, but we all kind of want the same price and the same customer service, and all want to be treated the same. So we all go to this. We're all kind of working with this new 3PL, but they all have their own problems as well. So there's an excellent company we were just discussing, building out in the open, in the social sphere, and I feel like it's really cool, because you know what, as you mentioned, the founders that give you the most transparency and updates are the most successful. So imagine, building out in the open where, yeah, judgment doesn't even cross your mind. You're just telling people what it is. And for all you know, everything's a little, fake it till you make it, of course. But you're also building a brand and a customer base, which is so, so cool. So, there's the company that we were just talking about, which I believe will go public one day that you were just mentioning. And there seems to be a tiny bit
Hopefully.
of drama in just the business way. It is what it is. Um, but the company is Flexport. When I had to downsize my business, my board of directors are saying you must downsize, and it made it a tiny bit easier to downsize the business, as I have to just do what we have to do for business. It wasn't like I hired you and it was a bad hire and I must fire you. You didn't betray me. Nothing bad happened. It just is what it is. But I had a logistics manager in my business. Why? When you're moving containers, timing, cash flow, quality
And
control.
these are real containers on a
Yeah,
boat in the ocean going from continent to continent.
you
These are
got
real
it.
things.
And every time I wanted to track a container, I had to go on like shipvessel.com, which is like literally like real time
1.0.
tracking of every single ship that's registered. I
Yeah.
believe every single ship has to be registered. But then I discovered this thing called Flexport, and it's almost like sending a package, right? So my team in China brings it to a port. Flexport takes care of the rest to my final destination in the US. And the coolest part is I literally track it. I see it moving. I don't have to call, email anyone. And they sort of come with an army. So like I have a whole team that I feel like I pay for them. I don't know. I don't know how they get paid
Startup, who
because
knows?
I do compare and contrast pricing, of course. I have come to the conclusion I will pay 10% more to work with this company compared to my other logistics because I always still check other logistics companies. I'm not just taking
Yeah.
specific word for it. But I don't know how they make their money per se. Obviously, they're garnishing and taking something off of somewhere. But I call my other brokers and they said it's $2,000. I hit up Flexport, they said it's $2,008. So it's all pretty much the same, but the level of customer service and they sort of work for you. It's a weird phenomenon. They help me
Hmm.
bring it most efficiently to my end warehouse. They'll bring it to their warehouses and label things properly and then send it to Amazon. It's one of the greatest things that's happened to my business on one of the harder sides of my business. So back to I fired that employee whose role it was. And it turns out this sort of replaced her anyway. If I discovered this before I fired her, or had to fire her, her job would have been on the line anyway because I
And this
fired her.
isn't really like AI, like
Yeah,
replacing jobs. This is just like a
no,
SaaS platform
it's
replacing a job.
efficiency. And I track that
Yeah.
whole container. I don't have to call anyone. Hey, Maxwell, it's not the first time they talk to me. Every time I've spoken to them, my old company, I'd call them and it's like, who's this? I go, well, I feel like
Come on.
I've done 50 containers with you guys. Remember my name. I don't pay you guys directly per se, but
But
I'll
come
pay
on.
you extra to remember who
Little
I am.
things, just like that.
So this company, we were just talking about it. He built that in the open and it seems like some fun things are happening. But it's just
I'll
business.
get into the drama.
Yeah, so let's talk about it. So from the consumer side, they're excellent, beyond excellent. There's no plug here. It's just the plug essentially is how much they've helped my business. And I got to, fortunately, fire an employee, and they totally replaced it while making my life substantially easier.
What other tech? Plug some others. Like, what else do you use that has made your life easier?
Shopify is one of the greatest tools there is.
I recommend
Why?
it.
Because I
Yeah.
used to have a WordPress website. I was told it gets better SEO and it has more efficiency and blah, 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 blah. Those are the websites that you essentially need to have an engineer full time working.
Yeah.
Nothing has an API that completely goes right into WordPress. An API for Shopify is everything. So like my warehouse is an API that goes directly to my warehouse. Somebody orders, goes to my warehouse, ships out. WordPress, you have to like build the pieces of the puzzle and put everything
Yeah.
together. It is a bizarre phenomenon. It always breaks. You have to have your own shopping cart. You have to have your own processing. This is where you pay the extra 0.3% to work with Shopify, because
Yeah.
everybody's
I built my
familiar.
first company on WordPress 15 years ago, and it hasn't gotten much better from like back end perspective. It's
So
still
that
very customized.
so that's that. I mean, between your 3PL, logistics, marketing, and a website, that's all a business is. Your product is what it
Yeah.
is, but that's up to you. But everything else, that's what I was saying. We all have the same, the same infrastructure, the same, piece of equipment. It's just how we use it and what we're actually using to sell it.
Yeah.
What we're selling on it, using it.
Yeah. So let's get back to the Flexport drama. We need
Yeah.
something juicy. We need some drama here. So basically,
Juicy.
Flexport, yeah, Flexport, I believe was a YC company. I'll double check on that one. But either way, they've raised $2 billion. The last valuation was $8 billion. Because as Max said, apparently it's really useful. I've
Yeah.
had
Great.
companies who we've invested and used it. They've had good things to say about it. I've heard from the larger companies that they're getting like the smaller long tail. Okay, fine. You're starting out, you're a startup, and it's like $1 trillion industry shipping. So that's perfectly fine. But the founder, Ryan, you can find him on Twitter, type fast, basically left about a year ago. Not really still sure why, but basically they brought in the former, like literally worldwide consumer executive from Amazon, Dave Clark, and he was there for a year. Ryan went over to Founders Fund, one of the top funds, also an investor in the company. And then a few weeks later, this just past week, a few days ago, David tweets out, "Hey, I'm resigning. You can go find the letter. We disagreed. Founders are great. Like, I'm moving on." And everyone's like, "Whoa, what just happened?"
What happened?
The founder replaced you by hand. Cool, whatever. They found you. He just joined the VC funds, and now the CEO. Oh wow, he's coming back. He's taking over. Okay, so something happened at the board level, growth wasn't there. As Max said, they have to IPO. It's true. They raised $2 billion, which is a lot in venture capital, at least in relative terms, at 8 billion. So like this guy came from a 2 trillion, maybe at the time, or $1.5 trillion company to an $8 billion company. So what did he do? He hired a bunch of people. He probably overhired in certain areas outside the core business, as I mentioned, which is just freight and logistics, to diversify their revenue stream. But I was trying to find more analyses about their actual business model. It's like, okay, great, shipping. They can increase containers ever so much. Was this like a ZERP phenomena when Max can talk about it? His containers went from 1,500, 2,000 to 15,000 to
Sure.
$20,000. But now they've come back down. So they were probably making so much money. It looked like they grew 2 to 3x during 22, 21. But now that prices have gone down, and then maybe shipments are flat or a little bit higher, their revenue is slowing down. As Max said, why do you IPO? They raised $2 billion. Can they raise more? Maybe a little bit of a bridge. He said there's $1 billion still left in their bank account, which is fine. But no one's going to give him more money. If he IPOs, he hopefully will have to raise another $1 billion. If he's lucky, they'll raise maybe a few hundred million privately if they have to. But like you IPO, you're going to have to raise $1 to $2 billion. That's like the big leagues. And so rescinded on Twitter. He's very public about it. Like, I'm really sorry. 75 people are supposed to start just on Monday alone tomorrow. We're rescinding all the offers. We'll help you get jobs. We know everybody. We'll help you like do the best you can. But like, this is business now. 22 is kind of like the reckoning. 23 is the recovery. Lots of people are firing, reorging, and cutting costs. Profitability is what is necessary for now. We'll get back to crazy times we always do,
I
right?
bet
It's
we
like
will.
after financial crisis, we had Dodd-Frank, and then we loosened it all up, and then we had SPACs that made no sense. So like everything is cyclical, but this was just some fun drama to like close out the weekend. And this is what's happening behind the scenes, but this is just like the most high profile one we've seen in a very long time. And it's a huge business. It affects a lot of people like Max,
I
and all
hope it
these
doesn't.
consumer businesses.
I hope my
Right.
reps
We
don't leave.
want it. Right, for many, many reasons. We want this to succeed from a venture
Yeah.
capital perspective, just in general for the industry. IPO opened the window. But from a logistics standpoint, there's really no other startup tech competition. So you need it.
It seems so basic too, to be fully, frank. I don't know what they're spending billions of dollars on. I've never seen them advertise or anything like that. It's usually where a lot of the costs go. Maybe it's just payroll or
They
customer.
have a bunch of planes. He was tweeting about all their 747 planes.
Well, so that was their next business plan. And, when I spoke to them, I go, one other thing that would be terrific is if you guys just had 3PLs scattered all throughout the United States as well. So I remember they charter their own planes. And of course, they want to get their own planes on top of chartering
Yep.
them, and their own container ships. So, I don't know if, us exporting America, being a large manufacturer again, and China's exports going down, specifically hurt their business.
Yeah, it's
I'm
looking
assuming they do.
good in our favor.
I'm sure they want the ports to be as efficient as possible as well because that affects them. But this is an industry that affects everyone. That
Yeah.
if you import something, you want this industry to do well, right? You want those mega ships to be built. We all felt the pain of when the supply chain fell apart. Just in
Oh
time
yeah.
inventory is no longer a goal. If anything, I bring in another 50 to 75% on top of what my projections or at least my numbers tell me. It affects everyone. And from a VC's point of view, this one thing affects all your other businesses as well. So, nobody understands everything you've ever touched, unless you've grown it personally in your backyard, has been on a truck.
On a boat and a truck, exactly. Um, and so this is also kind of like where inflation comes into place, right?
Oh,
Like we had a supply chain, everything was working, everyone had their margin, give or take, it was being slightly disrupted. But then when things stop getting produced for cheaper, it takes longer to get over here, it takes more expensive. Who is the bearer of that cost? Us. And so that's where these rates come in. You raise the rates, and it's supposed to slow down consumers from purchasing things, which then puts pressure on the manufacturers and the companies that sell to kind of lower their margins and get the prices down. So consumers, right? Supply and demand. And so that's what's kind of happening. Supply is being fixed. It's still not perfect, but it definitely is back to where it was when we saw all those pictures of just ships for weeks just
yeah,
lined up. Please just come into the port. They couldn't handle it. It was COVID, it was backup, it was technical issues because a lot of this is still done pen and paper, fax
yeah,
machines. It's kind of crazy that it took so long for a company like this to come along. But everything, headphones, hat, shirt, boat, plane, truck.
yeah,
We live and die by it. We take it for granted. And so this is a massive industry. I've looked into a few, we've been pitched a few, but like it's capital intensive. What do they need? They need a lot of people to man those phones, to build out the infrastructure to go sell and get into these old industries and old stalwart companies that run it.
yeah. I mean, just like the railroad companies are very similar to all these companies too. Yeah, all these old school things still run the world, and it's not going anywhere. These are not fads. These are not companies that are just going to disappear overnight, like some of the crypto and NFTs that we were discussing as well. What I enjoyed
Yeah.
about that, the crypto NFT world, is that those were almost like public offerings and SPACs and all these weird things.
Yeah.
It wasn't inclusive of everyone. So I always had the
No.
reckoning that it was going to disappear because I wasn't even smart enough to make sure I got the first round of NFTs or something like that. It was always the same people getting the same thing.
You
All
didn't mint it.
yeah, and like I didn't know, and you have to download this, Uniswap that, get this phone, that phone, this time, this, and if you
Connect this
didn't know, you didn't
wallet.
know. So I'm glad we went through that and that everybody finally agrees they're completely utterly obsolete NFTs at least. I don't think those are ever going to
Yeah.
come back. So, it's cool that we did go through that. You always want to thank these dark moments because it allows us to, not repeat history. But what is also, the shining light in it at least, is it is all about community. Back to your email. That email list is very valuable to me.
Yeah.
I could as much as social media is incredibly valuable, everyone checks their email. Social media things could fall through the grate and you don't see it, but email, I delete. Some people take pride in keeping their emails as clean as possible, and we all
Mine's
see
pretty
it.
solid.
And there's always some good stuff in it. I do unsubscribe to stuff every single day.
So much.
I don't know how it gets all over, but that's because companies are buying your email. um,
Yeah.
right? And because that's data, that's so cool. I turned off all my marketing that sent you text messages because I just felt it was too intrusive. I don't like it when they do it
Something's
to
weird
me.
about it.
Something's so weird. I don't want you to like pick up your phone while driving because you heard a ding or something. Unless they get
Yeah.
dark. Like, there's no reason for any of that. You check your email when you're sitting down. You have time to yourself. But that's all data is, at least from my point of view. Me collecting your email, giving you 10 to 15% off your first purchase, literally just to get your email in my system, is
Yeah.
some of the most valuable things. So that's why Klaviyo is valuable. That's why, all of these businesses are just trying to acquire your email because you become part of their community. And
Yep.
so, the NFT thing was all about community. But I also have a utility and a real life utility that you have to build.
Anonymous community. Right. There was no emails. You don't know who these people are. There's no data on them. Right. It was anonymous community. You could be
This one,
anybody. So many people with social engineering, like, oh, hi, I don't know what I'm doing, like hacking you. They spent weeks, months kind of gaining trust of people just to completely rug you.
And what's incredible about acquiring emails, if you do go on the major websites, Facebook advertising, Google ads, Pinterest ads, I could plug in their emails. So,
Yep.
I can make them a little bit more, it's another touch point. Let's just say that they're not angry to see, right? They're kind of happy. It's Peelaway's advertising, and then they actually end up writing a good comment. So my Facebook ads, it took about 2 months to mature. So just anyone out there, don't be frustrated about Facebook ads. They take 2 to 3 months to mature. I start seeing comments now saying, "I ordered 3 of these. These things are a godsend." I bought these for my 98-year-old grandmother. These are awesome. But those comments now are driving the conversions of those ads through the roof, because what do we all do when we see an ad? We all click the comments, because in many cases the comments
Yep.
tell you what's on the other side of that clickbait. Um, and so that's all just me acquiring emails. And then the emails you could do, like mix and match emails or related emails. So whatever other data these giant companies have on us, I say trace at nyvp.com. It's going to find other VCs or people in or around his ecosystem and pound them with the same advertisements I'm about to hit him with. And if he's a customer of mine, hopefully, they'll become customers of mine. And last but not least, just when it comes to all of this, is conversion rate of 2% on Shopify is
Wow.
sadly excellent.
Yeah.
So it is about hitting the ground, getting as many people to come to your website as possible. So what does that mean real quick? So every 100 people that I either pay to come to my website or organically come to my website, 2 of them purchase.
Right.
It's a bizarre
I'll
phenomenon.
I'll I'll be interested in that. Figure out how you do that. And so here's Klaviyo. So founded in 2012. So they just filed for IPO, their S1, 11 years later. They've raised 320 its last funding in 2021. Shocker. And a pre-money of 9.15
Oof.
billion,
Just an email
right? And
marketing.
so they're gonna do what, like 800 million in revenue. Let's see, the company reported a net income of 15 million on 320 million for the first 6 months of 2023. So they'll do what, 30 million EBITDA. We'll see. Probably the end of the year is usually stronger. So what, 400 million? Yeah, they'll do 750 million. Are they worth $9 billion? We'll see. We're going to see how much they're raising. They apparently want to raise about 750, which would be huge for them if they're profitable. They have an indefinite runway. But as you said, it's a good business. It's a solid business. There's always some churn. They'll launch new features. They'll acquire because they'll get all this new capital. They'll be public. They have stock. So that's the other reason. You raise a lot of money. You now have also access to other instruments, right? People have your numbers, you're financially public, so people can give you debt for acquisitions. So there's a lot of pros with some cons of going public. So I wish them all the best. These companies that were not the traditional tech companies like a Kava, Food Chain, Instacart, right? The Ubers and Lyfts. Lyft doesn't even do this. Uber. There's the DoorDash, like people always need food. Klaviyo. There's what HubSpot is a comparison. Shopify. They all work. So it's great to see a lot of these kind of non-traditional SaaS enterprise companies go public because these other ones are way overvalued. So I wish them well, selfishly, but also professionally, because we need this. It's
Did I
kind of
hear
not
Uber
getting.
finally became profitable last quarter?
Uh, yes, they hit whatever their funding number, EBITDA positive. So they lost $35 billion since they started the company, but they just made, I think, like a few hundred million in profit.
And it's
So
not overall profit, it's just that quarterly.
yeah, I believe it was that quarterly. They had their first quarterly profitable
And when did they
earnings, and
IPO? Is that fascinating?
uh, 2.5 years ago, and they just went back above their IPO price. So they IPO'd at 45. I think as of like Friday, they were like 48. So they're back up to $100 billion.
I'm happy for them because it's a service that I use. I always tell people, what's your phone? Invest in that. What is your favorite food? What is your car?
I know, I gotta work on that.
I always tell people to invest in that. And of course, I'm not a financial advisor, but
Yeah, NFA.
no, it's a dog eat dog world out there. And the startup point of view, it does seem like it is getting more back to some normalcy, as the founders got, the weird founders got weeded out of the businesses. The people that were just building to build got weeded out. But there's a lot of great new entrepreneurs and a lot of old, great new businesses, right? So the old businesses, I feel like I'm in a new business. When you feel like you're in a bootstrapped mentality with VC funding, it's such a better arena and game to play in. It keeps your sanity.
Yeah.
You're not seeing all these companies just high flying, getting, just the corporate jealousy of seeing these companies doing incredibly well, raising all these dollars. I used to say, how do all these people raise all this money all the time? And then what I hated, and we discussed in a different podcast, when people said money's easy to get and practically free. And I go, well, I don't need any right now, but I don't, if I do, I guarantee it's not as easy as it sounds.
Yeah.
So that
Yep.
always gave me a little bit of a bad taste in my mouth when people were saying that. But now it's back to reality, and the reality, as you said, is recovering as well.
It should be difficult. It should not be easy. And I hate to say that, but that's kind of the world that we live in. And as much as I want it to be easy, which it was in
Yeah,
2021, relatively, right? It's like your click-through rate goes from 2 to 4. That's phenomenal. So like you double your rates of funding. It seems phenomenal. But I want my founders to raise more capital. I want the markups, whether they're paper or kind of like real, depending on who else is investing. So it definitely is not as enjoyable as it was. We're getting back to basics. We're having harder conversations with our founders. And so that's why now's the time to come back to them. Some of our founders we're having tough conversations with about how to move on, how to fire, how to try and launch again. And so I want to see them in person. These are real people, real conversations, real relationships.
yeah,
Um, 3 of our last 5 investments in the last year were repeat founders.
yeah,
2 were successful and we reinvested in them. 1 did not work out. We still reinvested because we know they tried and they're smart and it wasn't their fault.
yeah. And that's
Yeah.
where the caring VC comes in, and the caring angel investors come in. But I was just talking to, I just went to a talk where it was a founder versus investor, and the founder has so much emotion towards the business, and not
Oh yeah.
toxic emotion, but just emotion. I built this business, and you know I didn't get to ask my question, but this is what, at least how I feel, and I could tell that she felt the same way. Was when you have angel investors, they're value adds. They want to be, at least, and they do want to coddle you a little bit. First they're the first people to believe in you, and they do want to help. But once you bring on VC money, she was under the impression that they're also value adds and that they're also going to be nice and coddle you. No, they actually, this is one of those stories where they kicked her out as CEO, and they go, wait, you just raised all this money from you guys, and now they have board preferences, and they kicked her out of her own company after she just raised money from them. So, once you enter the institutional money, just be aware that it's not, my angel investors are lovely folks, and I plan to return their money and then some. I'm not going to be their biggest hit, but the fact that I'm still alive, up and running with a wonderful business and product, hopefully it makes them proud. But I would not make a big VC proud, because I won't be the next $1 billion business per se that we all originally thought we would be. Don't get me wrong, we did think that. But
Yeah.
they have motives that are beyond my personal motives, and between selfish and having pressure on themselves, once you raise that money, you be prepared to learn that it's a different arena just from a pre-seed round or friends, family.
Yeah. And I won't comment on that, but I will say Liz is a phenomenal founder. Fortunate enough to know her at the kind of angel and pre-seed. And perfect example. We invested in her first company, acquired, reinvested because she's amazing. So that was it. We didn't even fully understand this, but we knew her. That's what half of it was
Yeah.
when she pitched us again. So that's the relationship that we hope to have with mostly angels if they believe in their smart money, and eventually VCs. So we'll talk about that another time, though.
I was wildly impressed. She's a different type of founder than I am, but I could see why you guys doubled down on her a few times, because whoa.
Yep. Yeah. It's one of those things. What do you look for in a founder? When you meet them, you know it.
Yeah, win or lose,
So,
you, that's still a good bet no matter what.
yeah, we'll talk about that probably in the next one in terms of like networking, meeting the right people, and understanding who kind of people are and reading them and getting access as well. So that will be a topic we'll discuss in the next one. If you have any other questions, let us know. Happy to. You can
Yeah,
find us on the interwebs. We'll be posting this everywhere. Find us on Twitter. Email us if you have our data. And there are so many other ways to get in touch. So we'll see
yeah.
everybody soon.
Peace out, everyone.